Online startups with eye-popping popularity stats are captivating the attention of investors, but is the current vogue for so-called vanity metrics, such as page views or user startups, an illusory measure of value? Evernote CEO Phil Libin is in London and joins me now live from the London Stock Exchange. Phil, thanks for talking with us. I'm certainly not accusing you guys of doing this, but I do see 65 million users, 10 million downloads. How much value is there in that?
Well, quite a lot. We actually don't track downloads. We have more than 80 million users, but what we really look for is dollars. How many of those people are premium? How many of those people are paying something? And there's millions of people that are paying for Evernote. So we think the value is pretty direct.
Okay, so you're not getting lost in vanity metrics, but would you agree that a lot of people in your space are?
Well, I think when things are growing so quickly, people naturally look for new ways of measuring things. Especially, a lot of companies are creating a massive amount of value before they really get revenue. I think Twitter, is a great example. There was huge value in Twitter well before they really started monetizing. So I think it's natural to look for metrics that are early substitutes for revenue, because a lot of companies are building beautiful, valuable things before they make money. But ultimately, it does come down to how much repeatable revenue do you have.
Sure. Right, I'm going to go back to the beginning. I heard you describe Evernote. You said, we make indispensable products for modern knowledge workers. Can you put that in layman's terms for me?
Well, we're trying to build a second brain for you. We're trying to build products that help you deal with this flood of information that's coming at you every day in your personal life and in your work life. Hardware and software to just help you remember everything, keep track of things, and be more productive.
Can you give us an idea of revenues?
Well, we have about 4 million people that are part of Evernote Premium. That's our paid version. We have about 10,000 businesses that have bought the professional version of Evernote. So we're still a private company. I don't want to disclose specific revenue numbers as we're getting ready to approach an IPO and be more serious with our financials.
Sure.
But it is millions of people paying for things in Evernote.
Are you making a profit?
No, we're not profitable now.
Okay.
We were for kind of a brief time in 2011, but then we decided to raise a bunch more money and invest it in growing the team.
You mentioned IPO. Two questions. One, is the company IPO ready right now? And two, I've heard you say you have a moral obligation to IPO. I'd like to know what you mean by that.
Well, I don't think we're IPO ready yet. I think my job as a CEO is to get us to be a point where we deserve to be a great public company. And I think that's still 2 or 3 years away to get to a point where we really should be public, where we're ready to be public. We need to have, I think, more predictable, more reliable, more diversified revenue sources before we do that. But we're well on our way. And about the moral obligation, I think, it's what it sounds like. Evernote is asking people to trust us with their lifetime memories. And I think being public is an important part of reciprocating that trust. Having transparency and also letting anyone in the world who wants to be an owner, I think is a great moral responsibility, and it's a great thing to be a public company. It's just not a goal that we want to rush towards. It's something we want to take very seriously and approach carefully.
All right. You talk. Sorry, I'm bombarding you with these things that you said in the past, but I find them interesting. You talk about 100. You want to be 100-year startup.
Yeah.
I know everyone asks you about this. How do you stay a startup when you become a big corporation? Doesn't the fact that you're growing destroy the startup mentality?
I think it often does for companies, but I don't think it has to. And that's really that's the bet we're making, is that being a startup, staying innovative, staying mission-driven, really has more to do with having a very clear idea about what you want the brand to stand for, what you want the company to do, and having a mission, having a quest that's sufficiently epic to make it your life's work. And I think if you can keep doing that, and you get the brightest and the best people to do it with you, you can stay a startup even once you're tens of thousands of employees and a century old.
All right. You're inspired by Nike, I know. You've called Evernote Nike for the mind. What is it about Nike that you admire?
Well, I think there's many things, many companies that we admire, but Nike in particular has built the most visible brand in the world for people who aspire to and self-identify as being athletic, for people who care about their bodies. And they make a great range of very innovative products. I really want Evernote to be the most important, the most visible company in the world for people who self-identify and who aspire to being smarter, to being productive. And I want to make products that make modern knowledge workers happier and a little bit more productive every day.
I want to ask you about the physical products as well. This is, I don't know if it's something that gets as much press as everything else, because you produce Moleskine notebooks, you produce socks, right?
Yes.
I'm right in saying this. I guess I want to know what's behind that, and doesn't that suck up funding doing stuff like that?
Well, the physical products are actually very profitable. People will pay for well-designed, beautiful physical things. So that's been a moneymaker for us ever since we launched it, although it's only been about 2 months. So we launched the physical products about 2 months ago, and it's a bit too early to get overly excited with early results, but they have vastly exceeded our expectations in the first 2 months. The main idea for us is we want to make these products that make you a little bit more productive every day. And whether those products are entirely in software or entirely physical, or they cross the line between physical and the digital world, all of that is fair game. Anything that we can do to make you live a little bit smarter, we think is a very Evernote-y thing to do.
Are you wearing a pair of Evernote socks right now?
Of course.
All right, final question for you. You said you don't have an exit strategy. Would you turn down $3 billion from Facebook now?
Probably.
Probably or definitely?
We would definitely turn it down now. Although, I have to say, there's no magic here, right? There's no heroics here. It doesn't make sense to sell your company at any price if you couldn't get investment at the same valuation. So if someone offered us $3 billion to acquire the company, I would just say, well, thank you, that's a big honor. Could I get a $3 billion valuation from private investors?
I guess the reason I ask you this is, you look at Snapchat and a lot of people say that's a fad, that might end. They may really regret giving up that $3 billion. What do you think?
It might end, it might be a fad, or it might be the beginnings of a great company. And it isn't so much that they're turning down $3 billion, it's that they're choosing to get that value from somewhere else. They're choosing to get investment at probably comparable valuations, I don't know for sure, and grow the company on the gamble that they're going to create more value. So I applaud them for doing it.
All right, Phil, best of luck to you. Thanks for talking with us.
Thank you.
Phil Libin, the Evernote CEO. Now, if startups are your thing, do check out our Reuters on the Road series, available on demand. Entrepreneurs get a lap of London's Canary Wharf business district in our black cab to pitch their business. This week's guest is Table Crowd CEO Kate Jackson. I'm Axel Threlfall. This is Reuters.